Welcome to Markets Now. I'm Michelle Rook with Kent Beadle Paradigm Futures. Well, the livestock futures all to the plus side this morning. Grain trade has been mostly lower, a few exceptions in the corn market and spring wheat. But Kent, let's talk about soybeans first. We are seeing a pullback here. Some of this has to do with the Biden administration announcing these Chinese tariffs, correct?
Yeah, absolutely. It has two different impacts. The first is just fear of retaliation, okay? And obviously, we sell them a lot of soybeans, and soybeans would probably be one of the first areas in which some sort of retaliation might take place in the form of increased tariffs on U.S. beans, which obviously would then try to push a little bit more business back to South America if they have the ability to execute any additional business into China. But then there's a second piece here, and that is some rumors last week. We had a pretty good rally in soybean oil, and there were stories last week about the fact that some of the imported used cooking oil, or yellow grease as the trade likes to call it, had been contaminated with palm oil, and that there was some unfair trade practices going on there, and that the Biden administration might in fact choose to single out yellow grease as another area for potential tariffs. And that did not show up in the list this morning. And so you have a fairly sizable correction in soybean oil, and that's pulling the beans down today as well.
Yeah, and I think we just hit 3-year lows last week, so we weren't too far here from being in some muddy water with that. The other thing is Conab came out with Brazilian production estimates this morning and raised those, right?
Yeah, they did. Now, the way that they raised them was to increase acreage, and there's been a discussion in the trade about the difference between U.S. acres and the Brazilian acreage estimate, and Conab actually moved a long ways toward the USDA assessment of what the total acreage for soybeans are, because yield actually went down, which was something that the trade was expecting given the flooding that we have in Rio Grande do Sul. And what this does is it still leaves a very large gap, about 6.5 million tons of production discrepancy. And because of the strong Brazilian basis levels, and now that we have the acreage kind of coming together a little bit, I think the trend might now be toward people looking for the USDA to actually come down on further estimates for total Brazilian production.
But Conab also increased the Brazilian production on the corn side a little bit too, didn't they?
And they did exactly the same thing, about 300,000 hectares there, lowered yield once again, and we still have a large gap. It's actually closer to 10.3 million tons on the spread between the most recent USDA estimate and the Conab estimate. And here again, we've had a lot of worries about the second crop safrinha corn in Mato Grosso. It continues to be drier than normal and warmer than normal as the monsoonal flow has pretty much disappeared. So, here again, we'll have to wait and see whether or not the USDA has to make some adjustments.
Yeah, so we are basically trading some of these planting delays and maybe some yield loss because of it in the corn market this morning.
We were at the time that we were higher, but we have also run into some technical resistance. Now, this 475 area is an even 50% retracement from last October's highs to the lows that were made, in February, and this recovery is retraced 50%, and we've run into some resistance there. That was the high of the day yesterday. It was the high of the day overnight. And so now we're getting some profit taking from the late longs, as well as probably some farmer selling on this rally as well.
Yeah, so at times we're leaking a little bit or having trouble holding gains to the plus side here. The other factor is you've got not only soybeans pulling corn down or whatever this morning, but the wheat market is correcting. That's also pulling down corn. And is that correction in wheat just profit taking?
I think that it is. I mean, if you consider the size of the rally, both last week and then here again yesterday, very sizable move. When you're talking about things like frost in Russia, those are difficult things to verify. They take a long time to kind of play out. And you get a rally of the magnitude that we've had, and you're going to get some farmer hedging activity, and you're going to get some profit taking from the spec side of the market. Now, it's probably been speculative short covering that has driven some of this rally as well, and of course we've seen that in all the grains. And so if some of that short covering has kind of run its course, at least to some extent, then you're going to get some back and fill type price action in the market.
Yeah, and I'll mention it in a moment here, but just have a follow up on the wheat market. Matif wheat has gone pretty much straight up on a chart. And so the wheat market's been kind of following that, trying to catch up too, hasn't it?
Yeah, that's right. And Matif was in fact a little lower this morning. And so, not surprised that we're getting some correction.
All right, so we're following that. The other thing you mentioned, the funds, okay, they decreased their short position in corn over 115,000 contracts as of last week's commitment of traders, over 100,000 on soybeans. Are they done liquidating, do you think?
No, I don't think that. We've looked at historical moves in the speculative corn position. If you go back from 2013 through 2019, all of those years they held very large short positions at some point post-harvest. And in every single one of those years, they moved to a total position that was net long, anywhere between 50 and 200,000 contracts. I don't think they're done. I do think it's possible that we've run into some technical resistance and some farmer selling that maybe will stop the rally here for the time being. We're probably due for some corrective activity once again, but I don't think that that we're done with the short covering from the speculator.
Okay, so hopefully there's some upside left here in corn, soybeans, and wheat. What about the cattle market? Back up a little bit here this morning. Boxes back to the plus side, which is helpful.
Yep.
And then you've got corn, maybe not at least off to the races here. So is that helping out as well?
Yeah, with corn currently down a little bit this morning, I think you're seeing some support in the feeder cattle. That's helping support the live cattle. Obviously, we have the very large discount to the cash that we've had for quite some time, and it's possible, frankly, that the cattle correction has run its course. Every day that goes by to me seems to be a day further away from the bird flu issues that have sort of plagued the market as of late, and we still have a very solid underpinning from the fundamental supply situation.
Yeah, and the futures are already discount to cash, so that should certainly be supportive here too, right?
Yes, exactly right. And I think that that those discounts to the cash are going to have to ultimately start to be taken out of the marketplace, especially as we go through the month of May and get closer to the beginning of the delivery period in the June contract.
Yeah. The opposite situation is true in the hogs. You have the futures at a premium to the cash index, which gets bigger as you get into the deferred months. And so we've corrected because of that, but are we done correcting, do you think?
Well, we've found some fairly solid technical support in June, somewhere in this $96 to $98 area. And I feel like that, we've pulled back far enough. We do still have a fairly solid seasonal tendency for cash markets to improve into sometime between the June and August timeframe, and we're pricing that normal seasonal tendency in. So I think what happened is with really cheap corn and that nice run that we had in the hog futures, that we definitely had some margin management, some hedge selling from the from the producer side of the hog market, and I think maybe that's kind of run its course. We also had some corrective activity. The funds had gotten long hogs. They needed to liquidate a little bit out. And, those things are likely to have run their course. And I think we can see the hog market start to move a little bit higher again, especially if cattle can rally.
Yeah, no doubt. And you've got cutouts back over $100. That helps too, doesn't it?
Absolutely. Yeah.
All right.
Cash is going to help.
Yeah, no doubt. All right. Thanks for joining us, Kent Beadle with Paradigm Futures. Remember, futures and options do have substantial risk. This is Markets Now.